Most people first encounter the idea of abundance through motivational slogans. Think bigger. Believe there is enough. Replace scarcity with positivity. Books that seriously examine wealth creation take a far less romantic approach. They argue that abundance is not an emotion, not optimism, and not denial of limitation. It is a philosophy about how value is created, expanded, and sustained over time, often in environments where resources initially appear scarce. At its core, abundance thinking challenges a deeply ingrained assumption that wealth is primarily about claiming a fixed share of limited resources. Scarcity teaches people to compete, hoard, and defend. Abundance reframes the game entirely. Value is not only allocated, it is created. And creation changes the mathematics of wealth in ways that extraction never can. Books that inspire durable wealth creation tend to begin with mindset, but not in a superficial way. They focus on orientation rather than attitude. Scarcity-oriented thinking asks, "What might I lose?" Abundance-oriented thinking asks, "What can I build that did not exist before?" This shift alters behavior long before it alters income. People invest differently. They collaborate differently. They tolerate uncertainty with more patience because they expect future creation rather than permanent limitation. One of the most consistent lessons across abundance-focused books is that wealth creation is inseparable from value creation. Money flows toward problems that are solved at scale. Abundance thinkers obsess less over money itself and more over systems' leverage and usefulness. Financial celebrities often describe the same realization: chasing money directly produced stress and short-term wins. Building value produced delayed but compounding returns. These books also emphasize responsibility as a defining feature of abundance. Scarcity externalizes blame. Abundance internalizes agency. This does not deny structural inequality or bad luck. It reframes focus. Abundance thinkers ask, what can be controlled, improved, or redesigned within imperfect systems? This focus on agency creates momentum even when circumstances are constrained. Another recurring theme is collaboration. Scarcity isolates. Abundance connects. Wealth creation books repeatedly show that the largest fortunes were built, not by solitary effort, but by networks, platforms, and partnerships that allowed others to benefit alongside the creator. Abundance is not zero-sum, it is multiplicative. When incentives are aligned, growth accelerates for everyone involved. Risk is also redefined in these books. Scarcity views risk as danger to be avoided. Abundance views risk as a resource to be managed. This does not imply recklessness. It implies selective exposure. Abundance thinkers protect downside carefully while leaving room for upside. They understand that avoiding all risk creates stagnation, which is a different form of fragility. Another powerful insight concerns time. Scarcity compresses time. Everything feels urgent. Abundance expands time. Decisions are evaluated across years rather than weeks. Books emphasize that compounding, whether of capital, skill, or reputation, requires patience, that scarcity mindset cannot tolerate. Abundance thinkers delay consumption, not out of deprivation, but out of confidence in future creation. These books also dismantle the misconception that abundance equals excess. In reality, abundance often produces restraint. When people trust their ability to create value repeatedly, they feel less need to display success or extract maximum short-term gain. Wealth becomes quieter. Spending becomes intentional. Identity detaches from net worth improving judgment. Another recurring lesson is emotional detachment from money. Scarcity ties self-worth to financial outcomes. Abundance separates them. This separation reduces panic envy and overreaction. Investors influenced by abundance philosophy often outperform, not because they are smarter, but because they are calmer. Emotional stability becomes a competitive advantage. Learning appears repeatedly as a renewable resource within abundance philosophy. Skills compound. Knowledge compounds. Curiosity expands opportunity. Scarcity treats learning as optional or risky. Abundance treats it as infrastructure. Wealth creators invest continuously in understanding markets, people, and themselves, not because they fear falling behind, but because they expect growth to continue. Books on abundance also emphasize generosity, but with structure. Giving is not framed as sacrifice, but as reinforcement of abundance logic. Strategic generosity strengthens networks' trust and ecosystems. It returns value indirectly and unpredictably, which scarcity mindset struggles to accept. Yet over time, generosity becomes one of the strongest signals of confidence in one's ability to create again. Another insight that appears repeatedly is that abundance changes how failure is interpreted. Scarcity treats failure as proof of limitation. Abundance treats it as data. This reframing keeps people engaged after setbacks. They adjust, rebuild, and continue rather than retreat. Wealth creation becomes iterative rather than fragile. Importantly, serious abundance literature avoids magical thinking. It does not promise that belief alone creates wealth. It acknowledges randomness, inequality, and loss. Abundance is not the belief that everything works out. It is the belief that learning and rebuilding remain possible even when things do not. As readers move deeper into these books, a subtle shift occurs. Comparison loses urgency. Anxiety fades. Wealth becomes less about outpacing others and more about aligning effort with long-term value creation. Financial success feels less frantic and more coherent. Abundance philosophy also reframes success metrics. Net worth matters, but so do optionality, time, autonomy, and resilience. Wealth is valuable not for what it signals, but for what it allows. This reframing reduces desperation and improves patience. Over time, abundance stops being an idea and becomes a behavioral pattern. People choose scalable problems. They build systems rather than chase transactions. They invest in relationships without immediate payoff. Wealth emerges as a byproduct rather than an obsession. And this is where the story begins to narrow. Because once abundance is understood not as positive thinking, but as a disciplined philosophy of value creation, behavior changes at a fundamental level. Fear loosens its grip. Long-term thinking replaces urgency. And wealth stops feeling like something to chase and starts feeling like something to build deliberately through contribution patience and systems designed to grow rather than merely protect, like learning to cultivate soil instead of chasing harvests, and realizing that abundance, when taken seriously, is less a feeling and more a discipline practiced daily. In the second half of this philosophy, the books that truly inspire wealth creation become strikingly clear about a truth many readers initially resist. Abundance does not remove effort, uncertainty, or failure. It changes how effort is directed and how failure is interpreted. Scarcity reacts to failure as proof of limitation. Abundance treats failure as information. This single reframing alters behavior at scale. People try again with adjustments instead of retreating with excuses. Abundance, as these books describe it, is operational. It shows up in how time, capital, and attention are allocated. Time is invested in skills that compound, rather than tasks that merely exhaust. Capital is deployed with a margin of safety rather than desperation. Attention is protected from noise so that long-term signals can be recognized. None of this is dramatic. All of it is decisive. Another hard lesson appears repeatedly. Abundance does not mean saying yes more often. It means saying no with confidence. Scarcity overcommits because it fears missing out. Abundance selects because it trusts future opportunity. Wealth creators influenced by this philosophy learn to protect focus fiercely. They chose fewer projects, deeper partnerships, and longer horizons. The result was not slower progress, but cleaner compounding. These books also dismantle the idea that abundance is purely individual. Wealth creation accelerates when systems are designed so others can win alongside you. Platforms, partnerships, and aligned incentives matter. Abundance thinkers ask how value can scale without their constant presence. Scarcity clings to control. The former builds leverage. The latter builds burnout. Risk in this stage of the discussion is treated with precision rather than bravado. Abundance does not deny downside. It prices it. The books emphasize asymmetric decisions, situations where downside is survivable and upside remains open. This approach turns courage into calculation. Over time, a series of small survivable risks outperforms occasional bold gambles driven by optimism alone. Another transformation occurs emotionally. Abundance reduces comparison. When people believe value can be created repeatedly, they stop measuring themselves against others' timelines. Envy loses urgency. Collaboration becomes easier. Decision-making improves because it is no longer rushed by fear of being left behind. Many financial celebrities note that this calm, not confidence, was the greatest upgrade abundance gave them. Importantly, abundance also clarifies ethics. When you believe the pie can grow, deception becomes unnecessary. Transparency becomes rational. Long-term trust becomes more valuable than short-term advantage. These books show that reputations built under abundance endure longer because they are not dependent on extracting value faster than it can be replenished. As readers internalize this philosophy, they stop searching for motivation and start building structure. Automatic investing, skill roadmaps, relationship stewardship. Simple rules that prevent emotional overreaction. Progress becomes boring and durable. Abundance shifts from mood to method. And then comes the quiet payoff. Wealth creation under abundance feels less like a sprint and more like stewardship. There are fewer dramatic highs and fewer catastrophic lows. Progress accumulates in the background. Optionality increases. The future feels wider, not because guarantees exist, but because capability has grown. So the lesson resolves without spectacle. The philosophy of abundance does not promise riches to those who believe hardest. It rewards those who build value, patiently, collaborate intelligently, manage risk honestly, and commit to systems that can outlast emotion. When practiced this way, abundance stops being a slogan and becomes a lifelong operating system for creating wealth that endures. If this reflection resonated with you, pause and notice what shifted as you read. Did urgency soften? Did the idea of building systems feel heavier or relieving? Share what stayed with you. And if you want to continue exploring books that replace hype with frameworks and fantasy with durable progress, subscribe and stay connected. Because wealth built on abundance is not loud, but it lasts.